brothers and brotherettes, the old stock market was this close to having a major breakdown today. And I know if you've been watching the streams, if you've been watching the update videos, it wasn't that long ago that we were talking about all-time highs and a continuation higher and higher and higher, but that is how quickly things change in the world's largest casino. So in this video, and I hope you're watching this in time because tomorrow, Friday, huge OPEX, which means there's a lot you need to know, but I need to break down exactly all the details that have played out over the past 24 to 36 hours that have caused us from going, oh wow, new highs, bulls are on a run, to whoa, who woke up the hibernating bears? In this video, I'll be talking about not only the political, monetary, economic situation, but we're gonna get into the nitty gritty of the overall market and really what we're seeing in the options flow and the positioning that is telling us that something wicked this way comes. So I hope you enjoy these market breakdowns. Don't forget to like, don't forget to subscribe. And with that being said, let's rock. By the time the world's largest casino went dingity ding 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 today, here was the official headline. Dow closes more than 400 points lower Thursday, S&P 500 slides from recent highs. Yes, it did make a new all-time high, but what this headline doesn't tell you is the fact that holy crap, we avoided major disaster just barely. Here's a heat map of the S&P 500. I always find this interesting just to see the strong sectors, the weak sectors. We kind of saw a little bit of a switcheroo. Recently, tech's been weak and financials have been strong. Obviously today that switch. The SPY, you know, if you're looking at this, you could be like, hey man, I see it. We puked, we bounced, we puked, we bounced. Kind of a Nike swoosh recovery, if you will. Doesn't seem that bad. The SPY was only down 0.4%. The Qs were down actually the exact same 0.4%. But I am telling you this right now, you do not appreciate how close we were to a multi-percent sell-off today. So to better understand that, let me paint the scene. Let me be a little bit of a Picasso and give you a quality painting. And to do so, we need to rewind a little bit to yesterday. Coming into today's trading session, things were a little bit spicy, if you will. As you can see here, we have Donald J. Trump, the president of the United States, his own True Social, basically saying, hey, Zelensky, president of Ukraine, you're basically a dictator without elections. So coming into today, things were on the political scale a little bit suspect. Fed officials are worried about tariffs' impact on inflation and see rate cuts on hold. The TLDR here is we're not getting rate cuts anytime soon. In fact, if you're holding your breath, you're going to be holding your breath all the way till July because that's the first time that there's more than a 50% chance that we're going to get some sort of a rate cut. So quick review here. Political situation, kind of wild that Trump called Zelensky a dictator. Obviously, EU not happy about it. A lot of people in the US, politicians, not happy about it. From a monetary standpoint, we had, okay, we're not getting rate cuts. We're going to kind of stay in this restrictive environment, which is suggestive that inflation is still high. And then all of a sudden, everyone's starting to talk about the fact that gold is continually hitting another new all-time high. This is interesting because remember, gold is a safe haven asset. When people are pushing money into gold, which is pushing price higher, that means there's a big desire for a safe haven asset. And we're not talking just retail traders like you, like me, like my cat. We're talking big money is pushing gold to new all-time highs, which you do when you're worried about what's happening with the value of the dollar, with equities, with crypto. Something crazy is happening. So that was kind of the backdrop from yesterday coming into today. And then we woke up and we realized, something really changed. Trump adds lumber to list of goods facing tariffs over next month or sooner. So you might be like, hey man, I'm not a DIY guy. I'm not building a clubhouse for my kids out back, you know? What's the deal with lumber? That's not the big deal. The big deal is this. He said, I'm going to be announcing tariffs on cars and semiconductors and chips and pharmaceuticals, drugs and pharmaceuticals and lumber, probably, and some other things over the next month or sooner. So this is a big fat question mark that all relates to the trade war, and it sounds like we have a lot coming down the pipeline that we have no clue what it is, how big it's going to be, who it's going to impact. When he was saying this, the market instantaneously, at least the futures market, because the equities market was closed, started to drop because everyone's like, what in the world does that mean? And it wasn't just I suppose, market participants who were up in the middle of the night trading, we got this from Reuters as well. Trump's approval rating slips as Americans worry about the economy. That's not that big of a deal. You could always say this poll's right, that poll's wrong, blah, blah, blah. But what I find concerning is right here, specifically related to Trump and the economy. What share of Americans approve of the president's handling of the economy? Since Trump has started, at first he got a big uptick. And now recently, with the continuation of kind of arbitrary tariffs and not us really getting any details, it's dropping right here. We were around 43-ish%, dropping to 39. Now, once again, I fully understand this is one poll. Take it with a grain of salt. But once again, remember, I'm Picasso. I'm painting the picture of what happened in the market yesterday, overnight, and how that set us up for today. So from a monetary standpoint, a political standpoint, and an economic standpoint, kind of on thin ice, if you will. And then that brought us to today. The green line was yesterday's high. The red line, yesterday's low. The white line is yesterday's close. This gold line on the bottom here, which is perfectly at 6,100, is the major options level. So remember, I told you I was going to break down everything and then tell you how we were this close to a huge breakdown. It was all because of options positioning. Use whoever your favorite options analyst data provider is, minus spot gamma, and they have so many tools. But what's beautiful about this is you can see where all the big players are. All the big players are. And we knew that, like, we're talking billions of dollars. We're basically saying, hey, 6,100 is the risk on, risk off paradigm. And what I mean by risk on, risk off is as long as we're above that, the overall market most likely gonna remain leaning bullish. So we're looking for higher highs. And even yesterday, it looked like we're gonna have a legitimate breakout and a continuation. And then all of a sudden this morning, we just took the first 30 minutes to not only puke through yesterday's low, but to actually break that key risk on, risk off level. Once again, this isn't retail. This is serious Wall Street money saying we'll be bullish above it, and below it, look out below. Well, okay, if you've been trading, if you've been around the block at all, you know that sometimes we get these little fake outs and you saw this pump and you're like, it's not going to be anything. Then you were probably sweating around 1050 saying, whoa, 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 whoa. And then we bounced out of it and you're, oh, okay, whew. Sweating, and then all of a sudden we started to turn again. And it was at this turn around lunch where we put in this lower high, we once again broke the risk off level. And then somehow it saved itself around 130. And if you look at this, this was the actual options flow on the day. Around 130, where things actually started to look really, really bad, somehow we got a market savior. They stepped in and there was aggressive 0 DTE call buying, and it was enough positive delta that the market makers came in and also offered support. And that now leads us to what in the world does this actually mean for tomorrow, Friday? There's a lot of things I need you to know about Friday, but the major thing is this. Tomorrow, Friday, February the 21st, is not only my mother's birthday, but it is also OPEX, options expiration, as in there's gonna be a lot of money moving one way or the other. There's a lot of pent-up energy in the system, and unfortunately, I can't tell you right now if it's going to be bullish or bearish. That's not what you're supposed to do. That's not a realistic way to predict the market. You should always have a bull case and a bear case and know where the key levels are, and also know events that are going to add more volatility. And that's exactly what we have right now. Now, obviously, if the S&P 500 right here, if it could recover above 6,130, 40, 50, okay, we're already on the risk on. The bulls are currently in control. But what I'm telling you is the bear case becomes a very, very real thing if we push below 6,100 and, unlike today, actually hold below it. And those types of big breakdowns or breakouts, these big catalyst events, are commonly associated with OPEX. So I cannot tell you with 100% accuracy if we should go into tomorrow being a bull or bear. What I can tell you is have your bias ready for both, know where the breakout and the breakdown levels are, and then play it accordingly. And I think a lot of people don't understand that active trading, you're not predicting. Don't predict who's going to win. You should react to those cases and exactly know where those levels are. I hope that makes sense. The other things you should know is around 9:45 and 10, we do have S&P global numbers, the PMI. We get some existing home sales. With respect respect to earnings, we are still in earnings season. Baba recently crushed it. Walmart got crushed. The one I'm most excited about is Texas Roadhouse. Also, with respect to individual equities, Palantir shares dropped 7% following the second day as retail traders' latest gold obsession starts to unwind. I need to be clear here because I'm getting a lot of questions about it. I'm not really an active Palantir trader. I'm an investor. Remember, when I said traders, that's when you're reactive. Well, Palantir, that's an investment, at least for me, and that's more predictive. That's when you're talking about fundamental analysis. Now, I know it's easy to conflate the two because it's seemingly two sports played on the same field, but that's all it is. Trading and investing are wildly different, so you have to ask yourself what you are. I love Palantir as a long-term investment. The farther it goes down, it's a better dip buy opportunity in my humble opinion. I get why Palantir is dropping. Pentagon getting its budget slashed, and we know that the Pentagon was a big customer, big revenue source for Palantir. And then on top of that, after hitting an all-time high, the Palantir CEO, Mr. Karp, was saying, hey, I'm going to be selling $1.2 billion worth of my own shares. Yeah, both of those are a bit of negative sentiment, but don't forget, we literally just hit an all-time high. So I think a lot of people freak out because of short-term movements, and that might be justified if you're a trader, but then ask yourself, are you a trader or are you an investor? I also want to move on very quickly. OpenAI CFO talks possibility of going public, says Musk's bid isn't a distraction. So we covered this narrative, this billionaire drama between Musk and Altman. It got quiet for a little bit, seems to be picking back up. Watch this just in case it gets crazy. And the final thing I need to leave you with is going into OPEX, knowing the craziness of 2 days ago, we almost had a major bullish breakout. Today, we almost had a major bullish breakdown. It's just we're getting this big consolidation where decisions have to be made. And with that, I want to let you know, don't forget about the seasonality for this time of the year. February, historically, is a bearish month. And if you look at the weekly chart, not only this week, but the next 4 weeks historically favor the bears. That is not the end all be all, but it is something important to know. And then for those of you who are maybe interested in the individual day seasonality, you could get that on Locals, Kohrs.locals. I give this out for 100% free. It'll be pinned in the description of the video. If you scroll down and down and down, here's the seasonality for each individual day. Thursday, February 20th, this was a very bearish day. Going into tomorrow, Friday, February 21st, over the past 27 years, the Bulls have only won this day 37% of the time, as in the Bears have won it 63% of the time, as in tomorrow, to conclude the week for OPEX, the seasonality is very bearish. I just want you guys to have as much information as possible to make better decisions. If you want to trade with me, I'll catch you in the live stream tomorrow, 9 to 11. It is a payday Friday. We're going to be doing some giveaways, so I hope to see you there. Other than that, I appreciate your time. I appreciate the good vibes. Love you all.